This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, a run through the market, specifically the focus on Absa. Shares in that particular firm fell by over 4% in today's trading session following the departure of the CEO Daniel Minelle, citing a professional disagreement over strategy with the board. This is taking place, remember, just 15 months after he was appointed to that role. The decline has wiped out most of the year's gains on that firm's shares, but over the last 12 months, Absa shares have actually gone up by 50%. We'll explore what's happened here next, but first, here are your headlines. The Absa CEO is in a shock departure just 15 months after his appointment. Europe's top football teams plot a breakaway league. We'll look at the financial argument for it. And the city-state of Hong Kong is banning flights from India, Pakistan and the Philippines over COVID-19 strains. Our starting point tonight is South Africa, specifically South Africa's banking sector. Absa's CEO, Daniel Minelle, has stepped down. Now, this shock departure comes just 15 months into his tenure, and it sent shares in one of Africa's biggest lenders down by as much as 5% at one point in trading. Minelle is a former deputy central bank governor. He took the reins at Absa from longtime boss Maria Ramos back in January 2020. At the time, he was tasked with delivering on a turnaround strategy that had largely been laid down prior to his arrival. Absa has been trying to improve its performance as it split off from its former British parent Barclays back in 2017. Its efforts have in the past year started to bear fruit, with the bank winning back lost market share in key products like mortgages. Now, speaking of the wider capital markets in South Africa, the JSE's gained nearly 80% since its plunge at the start of lockdown proceedings in March last year. It's outperforming developed nation counterparts in dollar terms and countering the narrative that local investors should get their money offshore as soon as possible. The all-share index at the JSE has delivered an impressive 13% return in dollar terms, thanks to strong commodity prices, which in turn have benefited heavyweight resource counters like Anglo American and BHP. Here's Angela Coppola with the details.
The local bourse has delivered double-digit returns in dollars so far this year, outperforming the US, UK and European equities, and that's due to a rebound in the global economy and an increased demand for commodities.
The globe is recovering strongly after the recession we saw last year. I mean, the global economy shrunk by about 2%, but this year it's going to grow 4% plus. And maybe the best example is actually the USA. The USA is growing by 6% plus this year. So we're seeing fantastic global growth. And of course, emerging markets, and especially countries like South Africa that export commodities, platinum, coal, iron ore, you are going to do well in that type of recovery environment. And you can see it in the prices of the underlying commodities.
The commodity price run has had another positive impact for South Africa.
It's probably pumped in a lot of money into the economy. We saw our tax take up 38 billion from what was expected in February. And a lot of that, about 50% of that, is due to the commodity boom.
Domestically, the local bank and retail shares have been undervalued for some time, which could see the local market continuing its growth trajectory.
And the reason for the undervaluation was basically South Africa. I mean, our economy didn't do well for a decade, essentially. And of course, people know what happened last year, but this year looks a lot more promising. We also grow by over 4% this year. So we've seen some recovery in the domestic shares.
There's another institutional investor spin-off to the higher commodity prices.
The commodities bring big inflows into countries, and that means that other sectors like banking and retail are also likely to do better in the longer run.
With some 60% of the performance of the JSE attributable to what happens globally, it's no wonder that the market is doing so well. What happens going forward will depend on what happens internationally. I'm Angelo Coppola for CGTN at the JSE in Johannesburg, South Africa.
Now, Zimbabwe's Treasury is sticking to its economic growth forecast estimate of around 7%. That's even after the nation's president said that projection would have to be lowered. Now, the forecast, as far as Treasury is concerned, is achievable because the country's had a good run of rains and will boost farm output to its highest level in about 4 years. The IMF, however, is a bit more sanguine. It's forecasting growth in 2021 of 3.1% this year. And remember, this is in an economy that contracted for the last 2 years in a row. President Emmerson Mnangagwa said over the weekend the Treasury would have to revise its projection because of expectations that new waves of coronavirus infections will curtail economic output. The vaccination program, he says, can be scaled up pretty fast, and Victoria Falls, a major tourist destination, will inoculate its 25,000 strong adult population within the next fortnight. On to another commodity-heavy economy. The central bank in the Democratic Republic of Congo has cut its key policy rate down from 15.5% all the way down to 10.5%. That comes in the wake of an improvement in the country's economic outlook. The bank says that the cut was made possible due to a slowdown in headline inflation. Here's CGTN's Chris Ochamringa with more.
The DRC's central bank says a drop in annual inflation enabled it to lower the country's key interest rate. The rate reflects the cost of borrowing money in different markets. Congolese authorities expect the rate of inflation to dip further to 4.54% by the end of the calendar year. Last year, the central bank raised its estimate for economic growth to 1.7%, given the strong performance of the DRC's mining sector. The International Monetary Fund says the country's economic outlook is focused at 3.85% this year. The DRC is the world's top copper and cobalt producer, and the prices it has been able to charge for its mining exports is seen as a key reason for its economic growth. Chris Ochamringa, CGTN, Kinshasa, Democratic Republic of Congo.
All right, then a quick run through some company news starting in the world of soft drinks. Coca-Cola Beverages Africa, or CCBA, is the 8th largest bottling company in the world in terms of revenue and Africa's largest bottler. It's revealed plans to list its shares at the stock markets in Amsterdam and Johannesburg. According to its parent company, the Coca-Cola firm, CCBA will issue some of its shares through an IPO in the next 18 months. MasterCard has strengthened its online identity management abilities by acquiring Ekata. It's an identity verification firm for about $850 million. Now, the move has been prompted by a rapid digital transformation that's happening in online commerce, accelerated by the COVID-19 pandemic. With Ekata, MasterCard now has a solution that should be able to verify a person's online identity, making the transaction in real time. The number of motor vehicles assembled in Kenya jumped 50% in the first quarter of the year to account for roughly 69% of all new auto sales. Data from the Kenya Motor Industry Association shows that the formal dealers, including Isuzu East Africa, Toyota Kenya and DT Dobie, assembled about 1,979 units in the review period compared to 1,319 units roughly a year earlier. And finally, the billionaire owners of Lego are set to shift more of their wealth into ventures that figure out how to reduce surplus plastic in environmentally friendly ways. Kirkby, which oversees roughly $20 billion in assets on behalf of the family behind the toy maker, is looking for at least one new plastic project to invest in 2021. It comes after first testing the market in 2020 with its purchase of a stake in Quantafuel. It's a Norwegian firm that transforms old plastic into energy. That's a run through your company headlines. You're watching Global Business Africa. Time for a short break. Here's what's on the other side. Europe's top football teams are planning a breakaway league. We'll be looking at the financial arguments for it. And Nigeria ramps up oil production to about 1.5 million barrels of crude every day.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo. Hello, Naro.
This
Well, of course.
is how all stories begin. See how they end. Only on Global Business.
Welcome back to the program. Let's head over to Uganda. Financial institutions over there have restructured roughly 46% of the entire loan portfolio. And that essentially gives you an idea of the sort of economic damage inflicted there by the COVID-19 pandemic. Now, the equivalent figure in September last year was about 40.5% of the entire loan book in terms of restructured loans. But according to a banking sector report by Stanbic, which came out in December, the value of restructured loans at that point in time was about 44.6% of the entire loan book. Uganda Central Bank had last year asked financial institutions to restructure loans for customers on a discretionary basis in order to cushion the economy from the damage inflicted by the pandemic. This credit relief period, which was expected to end in April, has now been extended again by the Bank of Uganda for another 6 months, effective from the 1st of April. Now, a few hours ago, I spoke to Fred Mhumuza. He's a development policy analyst and a lecturer at Makerere University School of Economics. I started our conversation by asking him if the ongoing credit relief period is not extended, what effect that would have on the amount of non-performing loans held by Uganda's banks.
There's quite a number of them are actually in the real estate. You have others in the hospitality industry. You have some in the education sector. Others were in manufacturing. We don't have so many in agriculture because agriculture continued to function. So they kind of scattered in the very areas you can have a trace of them with the COVID restrictions, that the most affected sectors were actually the ones which had the immediate hit, where you find these NPLs, but also, as we know, an economy is integrated. So even those who were not most affected, they were left open, but they required to rely on the other sectors which were closed. Eventually, they also caught up with the non-performing loans.
That's an interesting point you raise. Why was real estate among those that were hard hit with a significant concentration of NPLs? What is it about that sector's performance that makes it prone to having essentially non-performing loans?
Well, in Uganda, the real estate kind of survives and relies more on the bank credit, bank lending. We do not have equity markets. We do not have a lot of those developed systems. So majority of the people had borrowed money from the banks and developed their real estate, and hoping that they would be able to get tenants. Some of them were business facilities, others were residential facilities, and they seem to be working well as long as the businesses were open and people were buying and these landlords were able to pay back. But when people were sent home, the shops were closed. Even if somebody wanted to buy something, they couldn't come in. So the landlords stopped getting rent. But also in the domestic front, most of the employees were sent home, and so they had to negotiate with their landlords on matters of when can I pay rent, can I pay half, can I not pay for some period until when things are back. And this, of course, had a backlash effect and went all the way back to the financial institutions which had extended this credit for the real estate industry.
Lending to manufacturing, though, did grow well above the average for private sector credit growth, 12.2% in the month of January. Can you explain to us what exactly is causing that surge in appetite for debt among Ugandan manufacturers, given the context that you've actually pointed out? There was a contraction last year, 1.1% in GDP, employment has fallen, salaries have reduced, purchasing power presumably has gone down. But yet here we are seeing manufacturers going to the banks and saying, hey, we'd like more debt.
I think it's two things. One is mainly an accounting procedure, because quite a number of banks will actually book a restructured loan as a new loan. So it might be the same thing being rolled over. There is no cash making a movement, but because you have restructured the loan and it's going to go for a longer period, then that extension on the longer period might be checked into as a new loan. So that might appear that the system has increased. But also I've seen a number of manufacturing entities that have really grown. They were not affected so much for some reason or another, because either they were in essential services, some of them were possibly doing food processing, and others were offering services of a kind that people continued to be able to consume. Now for these, they grew up. We've been seeing some alcoholic drinks and soft drinks. People continued to have some of these particular services. So those manufacturing in those other areas increased. But also we know that a lot of Uganda's manufacturing is at the tail end of the manufacturing. It's mainly a kind of putting things, what you would call assembly kind of manufacturing. And so some of those were able to pull through.
So the central bank extended the credit relief period. It was supposed to end in April, at least first week of April rather. They've pushed it forward by another 6 months. But do you foresee another extension given all the economic damage that's been inflicted by the pandemic, or is this it?
I think it's an evolving situation, or they certainly will have to possibly extend it, because these first 6 months we didn't know when the country will be opened up. And as we have been saying, the argument is sometimes you open up for the economy, but you have not opened up the economy. Most people believed once the shopping centers are opened, everything would be home and dry. And then we realized the shopping centers opened, but people had no money to come and do the shopping. So these were the people who had restructured their loans, hoping once the economy begins to open up again, the business will perform and they'll be able to service their loans. That has not been the case. And I think these are some of the things that we've informed the central bank to do an extension. But also, let's not forget, we're just waiting for data over the last 6 months. But as for September last year, the economy was in a recession. So when you have that kind of economy contracting, that means the businesses which we had thought would have benefited and begun to come back to life and be able to service their loans were not able to do that. So I foresee a contraction, or at least very slow growth, continuing for the next 6 months. And if that happens, then the central bank may have to again push that further.
Now on Sunday, 12 of the top European football clubs from various countries, Spain and England included, announced that they would be launching a breakaway league to be led by the Real Madrid president, Florentino Perez. Now the plan is aimed at challenging the already established UEFA Champions League, and it's raised some very passionate, shall we say, wide-ranging reaction across the sports landscape. But why? Here's Mahia Mutua explaining that.
At the center of the storm surrounding football is a proposal that could shake the foundations of the sport by 12 of the biggest football clubs in the world to rival the already established UEFA Champions League. The 12 clubs include 6 from England: Manchester United, Manchester City, Arsenal, Liverpool, Chelsea and Tottenham Hotspur, as well as Real Madrid, Barcelona and Atletico Madrid from Spain, and Juventus, Inter Milan and AC Milan from Italy. Under the new chairmanship of Real President Florentino Perez, the plan is to get the blockbuster league underway as soon as is practicable, with the 12 founder clubs giving $4.19 billion, financed by American investment bank JP Morgan Chase.
What we want to do is save football so that it can live peacefully for at least the next 20 years, without stress and without having to say 200 million euros have been lost. The situation, I tell you, is very dramatic.
The European football governing body wasted little time in making it clear on which side of the divide they stand.
By my opinion, this idea is a spit in the face of all football lovers and our society as well. So we will not allow them to take it away from us.
However, the wider reaction has been even more venomous. Protests from supporters of European football clubs, including the 12, have raged since Sunday. Football managers, sports ministers across Europe and even the British Prime Minister have criticized the plan. Most have singled out greed or profits as a motivating factor, made harder to reconcile as the sport and the world at large continues to grapple with the coronavirus pandemic.
It will kill the game. It will totally kill the game. I'm not interested in European Super League. I think it's all the European Super League is basically money. It's just generating more money, and it's greed basically. It shouldn't happen. Hopefully it won't happen. Otherwise, I'll say it'll finish the game.
When in fact this Super League model that's being proposed is actually promoting more disparity amongst the top clubs and the mid-tier and bottom clubs. So you have these top clubs who are now going to be much more financially well off than the mid-tier clubs, and they can use that to their advantage of buying better players and, you know, easily winning matches in their domestic competitions, you know, relative to how they were doing so far.
Changes to football are inevitable. One of the major reasons cited for this move is proposed changes to the Champions League format by UEFA, slated to come into effect in 2024. UEFA, meanwhile, wants swift reprisals. President Ceferin has called for the expulsion of clubs participating in the current Champions League and Europa League seasons, and participating players banned from the World Cup and the Euros. The fight for the future of the beautiful game has just begun. Mahemutua, CGTN.
Certainly a story you'll be hearing a lot about in the course of the week. Let's move on to commodities. Nigeria's oil production level is gradually going up. It hit 1.57 million barrels a day last month, exceeding the country's OPEC quota. Now, while that's good news, relatively speaking, for Africa's largest economy, because it needs all the money it can get from oil and gas sales, some analysts do fear that pumping beyond its agreed to quota could land the country in trouble with OPEC. Here's CGTN's Deji Badmus with the details.
Nigeria's oil production benchmark for this year is 1.86 million barrels per day, a target it's so far not met. And with the country's OPEC quota fixed for around 1.5 million barrels per day, it's highly unlikely Africa's biggest oil producer will meet its budget production benchmark. But the country is currently pumping out slightly more oil than its OPEC quota. In March, it exceeded its quota by 70,000 barrels per day.
What it means is more money for Nigeria in terms of FX, quite a number of impact. Is going to help us boost the foreign reserve. Our government revenue has been a lot of concern in recent past. We've continued to borrow, but with more revenue coming to the federation account, it's going to have impact expectedly on federal government, state government, and local government.
Revenue from oil sale accounts for around 90% of Nigeria's forex earnings. But with a significant drop in oil receipts due to the COVID-19 pandemic, the country is now battling severe forex shortage, which is in turn mounting pressure on the local currency, the naira. So, the country would be hoping OPEC continues to tolerate the current situation, where it is producing more than its quota.
A number of OPEC nations have been notorious for, at the background, violating those target sets from them. So it's basically things that happen every now and then. But the real impact on our economy is really how the proceeds of what comes from OPEC is managed. So in terms of the income that comes in, yes, there's greater money for government to spend in terms of building roads to meet their obligations like salaries and all of that. All those things are possible. But that all depends on how governance is managed, not on the price of crude oil.
Nigeria has been borrowing massively to fund its budget, but there are concerns over the debt levels as revenue has slowed. While the government is diversifying its streams of income and doing all it can to drive up non-oil revenue, it is still keeping a very close eye on what happens in the global oil market. If things continue to hold as they are now, or even improve, Nigeria could then begin to breathe easy. Deji Badmus, CGTN, Lagos, Nigeria.
Egypt is seeking to tap into archaeological tourism to grow earnings from the sector amid a slump in inflows. The North African state has been boosted in recent months by a host of archaeological discoveries and events that have grabbed the world's attention. As CGTN's Yasser Hakim now reports, experts believe there's a unique opportunity here for Egypt's archaeological tourism to regain its allure with even more discoveries.
This was the dazzling display in the middle of Egypt's capital, Cairo, early this month. 22 mummies of ancient kings and queens were relocated from Cairo Museum to the Museum of Egyptian Civilization in an eye-catching royal golden parade, along with a light and sound show and musical performances in ancient Egyptian language that made international headlines. A few days later, the first discovery of its kind was made, the Lost City, a well-preserved 3,000-year-old administrative, industrial and residential city was found underground in Luxor. Egypt has been aggressively showcasing these milestones and other discoveries that could help draw more high-end cultural tourists to the North African nation.
While the whole world is suffering from a complete and total closure, Egypt has been working effortlessly to show the world that we're still finding new discoveries, that we are moving the mummies from one museum to the other. I think it was quite positive because it struck the world. It shocked everyone that we were able to organize such an event in the streets of Cairo. Despite the pandemic, it was positive for tourism. It was positive also to show the world that we are waiting for tourists to come as soon as the travel becomes available and allowed.
Egypt's tourism revenues dropped from $13 billion in 2019 to $4 billion in 2020, as the COVID-19 pandemic hammered the vital industry that's a major source of hard currency for the country. In a bid to keep the crucial industry in the spotlight, Egypt has turned to unlocking its rich ancient monuments history as an alternative to the pandemic-hit traditional tourism industry.
It is quite important, of course. Egypt sits on a unique civilization and unique archaeological sites that is never placed in the world. You can visit beaches and amusement places anywhere else in the world, but the combination between the sun, sea and sand and the archaeology and the activities that the traveler can do cannot be found anywhere else in the world.
With the fast tracking of the COVID-19 vaccine inoculation drive in Europe, which is Egypt's biggest market, officials expect October 2021 to be the turning point for the industry, as bookings pour in for the next winter season. The archaeological events are not over yet. More discoveries are expected in the next few months, and then this will be followed by the opening of the Grand Egyptian Museum in the second half of 2021. Yes, Hakim for CGTN, Cairo.
Tunisia's government estimates that the value of e-commerce transactions last year reached about $126 million across some 6.5 million transactions conducted online. E-commerce sales in Tunisia have been boosted in recent months by all the changes that the COVID-19 pandemic has imposed on us in how we work and how we do commerce. But purchasing and selling things online in the North African economy still faces plenty of hurdles, and it lags behind its peers in the region, as Adnan Chouachi now explains.
Aissam Sefi is the founder and CEO of Big Deal, a successful Tunisian e-commerce platform. He says that the second wave of the pandemic has created jobs and offered opportunities for many businesses operating in the e-commerce sector.
The first wave of the pandemic was a difficult period due to the lockdown and the unpreparedness of the e-commerce ecosystem in Tunisia. Since then, we've adopted our activity and technology to the new market needs by connecting e-merchants with customers. Now the business is booming for e-commerce and payment on delivery.
The Big Deal founder is also the vice president of the National Chamber of E-commerce and Distance Selling in Tunisia. He represents hundreds of entrepreneurs who pay salaries, corporate taxes and social contributions online. The e-commerce trader decries the spread of the informal market on the web.
Many people who are working in the informal and parallel market have moved the business to the internet by selling smuggled products through social media. The digital transformation to e-commerce was faster for these illegal operators than ordinary companies, SMEs, retail sector, and even some startups.
Authorities in the North African state, however, say the Ministry of Commerce and Tunisian laws guarantee the rights of online operators as well as customers in the formal market.
My advice to the consumer is to buy from the online formal market because there are guarantees. Checking the online store notes and comments by other customers is important. The identity of the seller must be visible and the e-commerce return and refund policy respected.
Tunisians can use the Click to Pay and e-dinar service to buy online. The Commerce Department says most transactions rely on payment on delivery, as many consumers still do not trust electronic payment systems. Despite the negative economic repercussions of the first and the second wave of the pandemic, experts believe the e-commerce boom is a bright spot. The Tunisian government is supporting all e-commerce projects in order to boost this sector in the country. Adnan Shawishi, CGTN, Tunis.
You're watching Global Business Africa. It's time for a short break. Here's what's coming up next. Hong Kong bans flights from India, Pakistan and the Philippines over COVID-19 strains. And China's president says the country is opposed to a new Cold War. The details coming up shortly.
Taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 48 hours, no rain.
No one again began holding guns. Machine guns from police forces toward the protesters.
Were you worried about your life at that particular time?
Not at all.
Your Excellency, thank you very much for your time now. What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are these stories that need to be told. Africa Live. Find your voice.
Accra is my kind of city. That's because when I'm here, I feel like I'm back home in Lagos or Abidjan, which are two of the major cities I grew up in.
Business in Africa is
After about a decade covering business news on the continent, I've learned it's all about the high risk, but also the high returns and the high energy. You simply have to adjust in order to keep pace. When I started out as a journalist, my dream was to open people's minds to the different perspectives. From the CEO in the boardroom to the trader out in the street, we all have different stories. From Accra to Addis Ababa, from Cairo to Cape Town, and I wouldn't have it any other way. Here at CGTN, we realize that Africa is on the move, and it's moving fast, but we're moving right along with it. I'm Ucheo Koronkwo, and I'm a business anchor and reporter at CGTN.
Welcome back. Let's run through some of the stories making your headlines at this hour. Starting in Chad, a transitional military council has been established in the state following the death of President Idriss Deby. The deceased president's son, Mahamat Kaka, has now been selected as the interim head of state. Earlier on Tuesday, the army announced the death of President Idriss Deby Itno. According to the army, he died from injuries suffered on the front line against rebels. On Monday, the army announced it had killed over 300 rebels in the northern province of Kinem. The UN Security Council has approved sending more peace monitors to Libya. A team of 60 professionals will be flying to the dividing line between eastern and western forces in the city of Sirte. The resolution expands the UN's presence in that part of the country. It's expected to help in easing tensions between the two sides while allowing the country to focus on its political transition. And finally, Europe's drug regulators formally established that there is a possible link between Johnson & Johnson's COVID-19 vaccine and rather rare blood clotting issues among adults who received doses in the United States. At this point, 6 such cases. The European Medicines Agency, however, backs the overall benefits of using that vaccine. That's a run through your headlines. Starting today, Hong Kong is banning flights from 3 countries. The city is trying to block variants of COVID-19 after it detected its first local case of a mutation in the virus. Here's Ann Cheng with the details.
Starting on Tuesday, flights from India, Pakistan and the Philippines are banned for 2 weeks, and these places are now classified as extremely high risk. Now, Hong Kong will ban flights from any location from which 5 or more passengers test positive for the N501Y mutant coronavirus strain within 7 days. N501Y first emerged in the UK, while scientists identified a related variant in South Africa, and they are considered highly contagious. Now, the government said on Sunday it invoked the suspension because these countries have each met the criteria within the past 2 weeks. So this ban also means that people who've been to these countries in the past 3 weeks cannot enter Hong Kong, and passengers who've stayed for over 2 hours in these countries on the same day of boarding their flights are also banned. Now, if you look back, 29 out of 30 new cases from Sunday were imported, while on Monday 11 out of 12 new cases were imported and 4 were mutant strains from India and the Philippines. So there's certainly a surge of cases arriving in Hong Kong, and these bans come as the city has confirmed at least 2 of its first local cases of the mutant strain. Meanwhile, health experts are saying more can still be done. One says these bans should be extended beyond 2 weeks, while another suggests if these bans are lifted, the mandatory quarantine period for travelers from these countries should be lengthened. Ann Chang, CGTN, Hong Kong.
China's president says the country is committed to peace and doesn't want a new Cold War. Xi Jinping made those comments via video link hours ago during the opening of the Boao Forum for Asia. The gathering in southern China's Hainan province is exploring ways to better integrate regional economies. CGTN's Yang Chingxi is there.
President Xi said China will uphold the country's commitment to peaceful development and win-win cooperation based on its long-standing 5 principles of peaceful coexistence, which emphasizes mutual respect and non-interference among nations. He said China will promote a new type of international relations.
The COVID-19 pandemic has made it all the more clear to people around the world that we must reject the Cold War and zero-sum mentality and oppose a new Cold War and ideological confrontation in whatever form.
In the world of rising protectionism, Xi called for more open trade and investment, as well as regional economic integration. An example is the signing of the world's biggest trade deal, the Regional Comprehensive Economic Partnership, last year. The deal among Southeast Asian countries and other Pacific nations is expected to strengthen Asia's industry chain, supply chain, as well as data and talent sharing.
Attempts to erect walls or decouple run counter to the law of economics and market principles. They would hurt others' interests without benefiting oneself.
President Xi said once the pandemic is contained in Asia, China will host the 2nd Conference on Dialogue of Asian Civilizations, a regional cooperation mechanism launched in 2019. Over the past decade, China has proposed several mechanisms of international cooperation, like the Belt and Road Initiative.
I have said on various occasions that the Belt and Road Initiative is a public road open to all, not a private path owned by one single party. All interested countries are welcome to take part and share its benefits.
The World Bank says the Belt and Road Initiative is expected to help lift 7.6 million people out of extreme poverty and 32 million out of moderate poverty by 2030. She said China is also working with Belt and Road countries on combating COVID-19. China has launched vaccine co-production projects with countries like Indonesia, Malaysia, and Pakistan. E-commerce is another area that President Xi hopes to promote in the initiative. With better infrastructure and regulatory connectivity, digital trade could expect a boost. Domestically, he said China is promoting free trade by rolling out a foreign investment law, shrinking the foreign investment negative list, and further developing the free trade zone in Hainan province, where the Boao Forum is held.
China will never seek hegemony, expansion, or a sphere of influence, nor will China ever engage in an arms race.
The Boao Forum for Asia is marking its 20th anniversary this year. It is one of the largest international conferences to take place during the pandemic. More than 4,000 people are taking part in this event, both online and on site. Yang Chengxi, CGTN, Boao, Hainan Province.
Now, one of the main targets of the Boao Forum for Asia this year is to promote economic integration within the region and to bring Asian countries much closer to their development goals. The data available suggests that Asia is increasingly not just drawing global investment, but a lot of that cash is now coming from within the region itself.
In 2018, global foreign direct investment saw a decline for 3 consecutive years, but developing economies in Asia saw a yearly FDI increase of 4%. They claimed a third of the world's total. That's compared to almost 40 years ago, when Asia accounted for only 1.6% of cross-border investment in 2080. Last year, global FDI saw a slump of over 40%, but developing Asian countries' inflows slipped only 4% and attracted more than half of the world's total. 2020 also saw China surpass the US for the first time to become the largest country with FDI inflow. Asia's internal investment dependence index remained above 50% for 4 consecutive years from 2016 to 2019. FDI from the continent hit 63% in 2018, 10% more than a year ago, suggesting the preference of Asian funds in the internal Asian market. China's FDI dependence on Asia also reached a record high of 84% in 2017. When it comes to China's investment in foreign countries, Asia accounted for 13% of China's outbound investments in 2018, higher than North America and Europe, which came in at 6% and 4.6% respectively. In 2020, China's investment to ASEAN countries jumped 52%, totaling over $14 billion. The same year, China's investment to 58 Belt and Road countries, 43 of them in Asia, hit almost $18 billion, an increase of 18% on year.
Carbon neutrality, there's a phrase you're hearing a lot more as countries try to reduce their net emissions. But for the oil-rich Gulf states, it does imply some major shake-ups of energy production and consumption, but also how they're going to be funding public expenditure in the long term. Here's Jacob Greaves now looking at how the region as a whole is attempting to go green.
The oil-soaked landscape of Saudi Arabia, there's a megacity being built. It's called NEOM, and it's being funded by the country's vast petrodollars. Right now, construction is just beginning, but it's being sold as a carbon-neutral city the size of Belgium, set to open in 2030. The question is how.
We can use wind as a very complementary renewable technology to be combined with PV-based solar.
They're also building what will be the world's largest green hydrogen manufacturing plant to add to the renewable energy mix. It will be needed. It's a futuristic concept with 5G, AI and technological advancements set to be at its core. The required energy capacity to service the new city is expected to be in the tens of millions of gigawatts.
In some of our plants, the total consumption for NEOM would be comparable with a country like Portugal, Austria or Czech Republic. Not because we will have as many people living there, but just because we will have industries that need renewable electricity, and that's where we would focus on.
Not every country in the Gulf is looking at such a radical solution to curtailing its carbon footprint. The UAE is planning to cut emissions by 24% by 2030. Abu Dhabi's wealth has been built on fossil fuels. Now it's having to prepare for a future without them. As with NEOM, in this sun-soaked country, they're also looking to the sky, but it's not so straightforward. One of the problems facing solar power is how to efficiently bridge the gap between daytime, when the energy is produced, to nighttime, when production stops but demand persists. That means changes to storage capacity could drastically alter how widely this technology can be used. One Swedish startup thinks it's found a solution. Azelio has been trialling its technology on the site of Abu Dhabi's Masdar.
During the day we generate, for example, electricity with solar panels. This electricity will melt a metal alloy, which is composed of recycled aluminum. And this alloy will be contained in the tank that you can see behind me. So we have several tanks, and at night the metal alloy will solidify and release the heat that we recover to power a Stirling engine that will regenerate electricity.
Change appears to be coming down the pipeline, with governments pushing to drastically reduce their carbon footprint. But for now, they're still amongst the highest CO2 emitters per capita on the planet. Jacob Greaves, CGTN in Abu Dhabi.
Countries in Latin America are facing the challenge of rebuilding their economies from the devastation of the coronavirus pandemic. As that's happening, the call for these economies to transition to greener, cleaner sources of power are growing louder than ever. Argentina is one country where the green movement is gradually gaining momentum. Joel Richards explores this trend in What's Hot tonight.
So far this year, Andrea Noboa has eaten beetroot, carrots, eggplant, greens and herbs, all from her terrace garden that overlooks Buenos Aires.
Yo hace muchos años que estoy con esto del Tratado del Cuidado del Planeta.
I've been interested in caring for the planet for a number of years and have been doing things like separating garbage when it wasn't common here in the city. This is something that reduces waste from a home, and it is about contributing. I'm someone who thinks that every little action helps.
Andrea bought her vegetable garden from the company Cultivarte, which launched in 2015 and has seen interest in their products grow during the coronavirus pandemic. They make these gardens from artificial wood using recycled plastic. They run workshops and advise clients on setting up sustainable habits in the workplace and at home. Cultivarte say they are part of the growing green movement in Argentina.
We see the idea of the circular economy and the green economy is higher up on the public agenda. Many organisations are working so this agenda is more in view. From our point of view, it's urgent that it becomes more mainstream.
The global context of the climate crisis makes us rethink our production and what we consume. In the same way, the pandemic invites us to be more introspective about the same idea, how we consume and produce.
The pandemic has accelerated the debate over the future model for economic growth in the country. Christoph Ernst leads the UN programme Partnership for Action on Green Economy, also known as PAGE, in Argentina.
After the crisis, we could rebuild our economy in a new way, in a better way, and to have the environmental concern in the center. As I said, for example, the idea of having a new Green Deal goes into this direction, yeah.
Argentina has been one of the several economies hit hard by the pandemic in South America. In recent years, it has been increasingly debating its development model. In energy production, should it exploit the vast shale oil and gas reserves or focus on expanding its huge renewable energy potential? Along with Brazil, Peru and Uruguay, Argentina is one of the member countries in the United Nations PAGE programme, which works with government to develop strategy for a green transition that is inclusive and sustainable.
I think it's very important also to understand the interdependencies on the economic side, the social side, and the environmental side, and to see it in an integrated way. And that's why policies are important, but not just here in environmental policy, here labor market policies, but integrated policies.
Countries like Argentina face an unprecedented economic crisis, compounded by the climate crisis and now the pandemic. Many believe the transition to a green economy is the only way forward. Joel Richards for CGTN in Buenos Aires.
All right, then around through commodity prices. Let's focus on copper in this segment. Copper forwards in London came close to a decade high of just under $9,500 a tonne once again today, but not quite there yet. Still, even then, at $9,376 a tonne, copper prices have gone up by over 80% in the last 12 months. They've been spurred on by a combination of rising demand, cue the China recovery, of course, and tight supplies on the other end of the equation as well. On the continent, producers like Zambia actually did have a decent year in 2020 despite the pandemic. Output over there was over 882,000 tonnes, according to the mining ministry. Here's what's coming up next. COVID-19 lockdowns inspire chefs in Paris to move the restaurant experience into private homes.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Juba,
Johannesburg, Ethiopia, Tanzania.
Africa Live. Find your voice.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back to the program. Underground restaurants offering wealthy individuals a pre-pandemic dining experience have made headlines in France over the last couple of weeks. All restaurants and cafes have been shut down in France, for eating in anyway, over the last 5 months. The country this week started a new limited nationwide lockdown designed to deal with a surge in COVID-19 infections. But like in many other sectors, chefs are adapting in order to cope with the current restrictions. CGTN's Alexandre Majala has their story on Grassroots.
Parisians yearning for haute cuisine dining since the COVID-19 pandemic closed down restaurants have found an alternative. Private chefs who serve up meals in customers' homes. Fatiha El Kadoui is a trained chef who takes bookings from private individuals, brings her ingredients to their homes, and uses their equipment to prepare and serve restaurant-quality dishes.
With regard to reservation requests, I used to be booked 7 days a week before COVID-19. But I did not have to refuse so many requests. I did not have to turn down so many people. Now, it's true that I have to turn down lots of people because I can't split myself into two. It's a bit complicated, but yes, there is a very significant demand. This demand exists because these people used to go to restaurants 1 or 2 times a week or even more. For example, company executives used to organize work dinners or lunches with their clients, and now they have to stay at home and invite their clients there, obviously, within the limits of the law.
She was busy before the pandemic, but now she serves between 60 to 80 meals monthly and has to turn away up to 30 bookings per month. Working in people's homes doesn't stop her from executing a fine dining experience for her customers. On this occasion, a foie gras entree, followed by a sea bream ceviche, then a dish of gambas and scallops were on the menu for the mother-daughter duo that are her clients. But her service is not within reach of every Parisian. A lunch for 2 comes in at €170 or $205 per person.
We have a restaurant at home. The dishes were magnificent, very well served. It was a bit of an experience from another time because it's true that amid the pandemic, we obviously want to go out, but we can't. So this is recreating that moment of exchange at home, and it's really great for us, so I'm very pleased.
Restaurateurs and chefs around the world have come up with creative ways to carry on working through a pandemic that has devastated their industry. Some make high-quality meals for delivery, while others offer cooking classes on social media. According to the Organization for Economic Cooperation and Development, French people spend more time than those of any other developed nation eating or drinking. So restaurant closures hit them particularly hard. Alexandria Majala for CGTN.
Quick run through the currencies. We'll focus on the fixed income side of things in Kenya. Yields on Kenya's Eurobonds did jump earlier today after Kenya's Finance Ministry put out an advert looking for advisory services to help the government restructure some of its external commercial debt. Now, the state had made its intent to restructure some of its expensive commercial dollar debt well before this. And the IMF does rank it among the 12 states in sub-Saharan Africa at high risk of debt distress. We'll keep an eye on that story and update you. For now, though, that's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen on the program. There are many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.